US dollar index has been extending its stellar rally for 3 weeks in a row. The US currency benefits from both risk aversion and risk appetite. Today, the economic calendar reminds traders of the US inflation data, building permits, and speeches by several Fed officials. Meanwhile, the US dollar has been trading with extreme volatility, which has not been seen for long. It would be a good idea to remain cautious as the greenback could lose momentum and halt its climb. Market sentiment will depend on macroeconomic data and the tone of the Fed officials. The US dollar index opened the New York trade at near 99.4. The strong New York Empire State Manufacturing Index again proved immunity of the US economy to the coronavirus, unlike the eurozone's economy, which disappoints investors with negative metrics. Such difference in fundamentals props up the US dollar and weakens the euro. The euro-dollar pair dropped below the level of 1.08 with prospects of a bounce from 1.0790. The euro could continue its weakness both in the short and medium term. The euro will be able to recover only amid positive fundamentals. On the whole, both American and European business is equally vulnerable to troubles in the global trade and the coronavirus. However, every time the market finds evidence that the US economy regains footing promptly, whereas the eurozone's economy is not able to overcome headwinds for long. The US dollar versus the Canadian dollar pair is trading firmly lower, having reversed from yesterday's climb. The loony bulls are again setting the tone, so the currency pair retraced to a one-week low at 1.3221. The Canadian dollar strength comes from rising oil prices. Today, traders were anticipating upbeat data on Canada's consumer inflation. The CPI rose 2.4% in January on a yearly basis, beating the forecast for a 2.3% gain. Thus, the loony bears are discouraged as the Bank of Canada is unlikely to ease monetary policy in the near future. The US dollar versus the Canadian dollar pair is expected to continue its correctional decline. Earlier, the main reason behind the advance of the currency pair was strong macroeconomic data from the US and downbeat data from Canada. Today, the pound sterling plummeted below the level of 1.30 versus the US dollar, despite unexpected inflation surge in the UK. Investors are monitoring the trade talks between London and the EU. That's all for today. Thanks for watching and see you back tomorrow.